Good afternoon. This is Todd Colvin coming to you from the floor of the CME Group. We are talking metals, gold. While seeing a modest pullback on Friday, remains very bullish and the outlook looks good. We've had 6 consecutive weeks of higher highs and higher lows. Yes, those types of trends tend to over-exaggerate themselves, and we may see a pullback, but after touching 365, we did see that pullback. Seeing gold pull back all the way to 1350. I think we need to get down to 1330 before you want to really start to talk about things turning negative. And I think with the Fed meeting coming up, I think with the dollar getting hit, I think with a changing of the Fed guard, so to speak, next month with Jerome Powell coming in, that there's a lot of reasons why you want to own gold. But I think ultimately the technicals are telling you that this bull market run or this bullish market run is not over yet. And I talked about the dollar. Yeah, it continues to get hits on 4-year lows. 2017 was just the beginning, it looks like, as we enter 2018, and things haven't gotten any better. We've had Treasury Secretary Mnuchin talking. We've had Donald Trump trying to, beef up the dollar a little bit, at least keep it from sinking, and it hasn't worked. And I think that right now the dollar becomes really the core of the gold rally. Yes, the equities being on all-time highs has to drive a little bit of fear into some investors who are sitting on some pretty fat gains. And I look at gold as pretty much a natural hedge to any sort of macro knee-jerk catalyst move in the equity markets. That's not going to help you day to day, but it's certainly on a 5-10% correction, I think that gold would be okay. And then lastly, if you look at, we have a Fed meeting next week. This will be Janet Yellen's final meeting. It's going to be about not about rate hikes. It's going to be about expectations and outlook. And right now, the Fed is slated to raise rates at least twice this year. I think we're about 60% of a third rate hike in December. So right now, we are leaning towards, call it 75 basis points of rate hikes. I think that the Fed would like that to be closer to 100 basis points at some point. At least for the market to price it in to kind of catch up to their dots plan as we move forward. But I think as we get into Jerome Powell, he'll have his semi-annual testimony to Congress in February, his first real event as Fed chair, and then he'll have the March FOMC which is expected to raise 25 basis points to kind of show us what he's got. And right now, I think that gold prices are going to be very fluid during that period as we approach March FOMC. So right now, gold in a bullish trend remains, so even though we saw a modest pullback, and 1330 is really going to be your line in the sand if you're looking for a selling point. I think at this point, though, buyers can come in on a scale basis and look for us to extend beyond that 1365 high we put in this week. This is Todd Colvin coming to you from the floor of the CME Group.